Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, this is update on the Forex markets from the ForexPeaceArmy.com. So today guys, it was really difficult choice what currency to choose for daily update, because this was the euro currency that we have discussed on the weekend, and here we also have the interesting situation and the Canadian dollars. So we have the Canadian the working setup in progress, where we're expected to see another leg up on the chart, and right now the Canadian dollar is calling and forming the consolidation right below the important resistance line, and usually this is the sign of the preparation to the breakout. Also the crude oil today is dropping, so it means that the stop grabbers that have been formed last week on the crude oil probably will work, and this should lead to the corresponding breakout on the Canadian. That's why the Canadian dollar is also currently a very interesting picture. But still, I have chosen the euro currency. Situation here stands a bit tricky, as we have discussed in the weekly research. On the daily chart, theoretically, the bullish patterns that have been formed here are still valid. So, because market hasn't broken yet through the important level, it's crucial level. We have two patterns in progress. The first pattern is the guardless 222 buy. So we can see first thrust up, ABC retracement down. And minimum target of this pattern is 116 area, is 618 extension of this A, B, C bottom. This will be D pattern. It's 116 because this is the 618 retracement, this bottom to this top. It means that the target will stand right at the top, because the 618 extensions will be will lead market right to the previous tops around 116. Another pattern that is forming here is the part of this guardless 222, and as you can see, this reversed head and shoulders pattern. And if you will calculate the target of the head and shoulders, this minimum target from this bottom, bottom of the head, this will be A point, B, C bottom, A, B, C, D, AB equals CD. This will also should lead us to the same destination point, so they are the same targets. So the starting of the head and shoulders will automatically complete the target of the minimum target of the guardless 222 buy pattern. Anyway, this will be the 116. And theoretically, as we said, this pattern is still valid, because invalidation point for the overall this setup mostly stands around 111 area. Why? Because if market will break through the 111, it will drop below the bottom of the right shoulder, and it will mean the failure of the head and shoulders pattern. Usually, in the most cases, the failure of the head and shoulder leads to drop below the head. So as soon as market fails around the shoulder, it as a rule drops below the head, and the dropping below the head, the chain reaction, will mean the destruction of the guardless 222 buy, and it will mean the final downside direction in the medium-term perspective on the monthly chart, on the weekly chart. This will be the open door to probably 105 area. That's why 111 area is very important. Although this is invalidation point only for the hand shoulders, but if market will drop below 111, it probably will trigger the chain reaction of the consecutive failures. So first it will be at the shoulder, second it will be at the head, and so on. It will lead market to the 105 lows. That's why this level is crucial for a current bullish setup. This is what we could say on the theoretical side of the process. So we see that theoretically these patterns are still valid, but at the same time we see some signs that are not really bullish, and that's not really stands in a row in agreement with the bullish patterns, particularly speaking the action on the right shoulder. So take a look what has happened. As soon as the bottom of the right shoulder has been created, market reestablishing upward action right to the neckline. But take a look, it even hasn't quite reached the neckline. Although there were supportive Data have been released. I mean, the ISM services, not really good non-farm payrolls released on the beginning of the September, so they were not sufficient to push euro currency through the neckline. And overall behavior here is not really supportive for the bullish scenario, because on the right side of the hand shoulders pattern, bulls should take the control. So market on the right shoulder should start the acceleration to the upside. This is where the final stage of the bull's victory stand with this pattern. But here we do not see that. So after the starting upward direction, market wasn't able to reach the neckline, and it dropped down again. Now it would stand some kind of the retracement or something of that sort, some curious action. Theoretically, it is possible to see the butterfly here, as we have discussed also, because take a look, this could be left wing of the butterfly, right? That could become the right wing, because market still stands above these lows, and market theoretically could show some kind of the breakout. There is no doubt that the driving factor for that will be probably the Fed comments, because in the nearest future no other driving factors we have on the horizon, so only the Fed comments. And if we suggest that they will be more dovish that market expect to hear, maybe we will see some action. That's why we mostly call you to not take the short position before we will get the breakout for the 111, because here, as soon as market will drop, it will erase the bullish scenario, and it will be much safer to take the position after that, if you would like to take the short position. Speaking on the long position, guys, taking in consideration all that we have said about this area, this will be some kind of the gambling on the Fed comments. So if you would like, because we currently do not any tools and any indicators that we could forecast the perspective of the results of the Fed meeting or something of that sort, and that will be the pure gambling. So if you would like trying to just put some bet on this event and trying to take the part in the pain or gain situation, well, theoretically you could do this. So just try to take the position as closer to invalidation point as possible, because that will be your risk. If Fed will comment with the hawkish view, this will be dropped down and you will lose money. That's why you should calculate your risk when you would like to take the part on this. That's why we currently can't give any recommendation on the taking long, because we think that market mostly looks bearish right now. So that's shortly what we have discussed in the weekly research. Right now we're coming to the most recent action, and here we were searching for some tool that could help us to understand and get the early sign of the possible direction when the market will choose this direction, and we come to conclusion that last action here could really help us. So let's take a look at on the 4-hour time frame chart. You'll see that recent action takes the shape of the triangle. The right shoulder takes the shape of the triangle. We have first swing inside the triangle, second, third, fourth. So market hasn't quite reached the bottom here and turns up. And depending on how market will behave on this final swing inside the triangle could help us to understand what really will happen. So if market will not reach the opposite border of the triangle and turn down, as we have suggested, this will be early sign of the possible bearish breakout of the bottom of the triangle. So right now we're watching for the level that we have specified. This is approximately 1215 area. It's conference resistance as well. I just do not have another pair of the fib levels here. So why this level is important? Because take a look that besides of the fib level itself, this is the lower border of the previous consolidation where market stands for a long period, so almost for the week. And you can see this was really the churning of the market, since just because here stands significant trading volume. Long tails suggest that market was really some kind of the ping pong action and trying to move as to the upside as to the downside. And this was a really long struggle between the bulls and bears and this consolidation. Here we're an attempt to continue action to the upside that has failed, and after that market has dropped. Usually market protects such sort of the consolidations from the returning back, from the price returning back inside of it. That's why this consolidation lower border is very important. And if market will return right back inside of it, this will be not really good sign, because this will suggest that market could continue move higher, or even this upward breakout could happen. So to keep pure bearish scenario, it will be better if market will fail to return back in this consolidation. Yes, we could let market to reach, for example, the pivot resistance, because from the pivot framework, it's possible to test the weekly pivot resistance one and keep valid bearish scenario. So usually, as you know, when a retracement starts, it usually should stop at the pivot resistance one. But as I said, for me it will be better sign if market will fail here and will not return back inside of this consolidation. This will be absolutely perfect from the technical point of view. So now you can see market has reached the resistance that we have specified in our weekly research scenario around weekly and monthly pivots and Fib level 1216. On the hourly chart, guys, we have the double repo pattern that we have discussed also, and said that if you're a scalp trader you could search for the Jordan patterns because first down was nice. Let's take a look what we have. Close above the 3x3, close below, close above again. That was confirmation of the double repo buy pattern. It's minor retracement and upward action. As you can see, market right now has completed the target of the double repo, and even higher level has been reached, because we need to use not this level but the level not from that top but from that top when the thrust has started. So it already has been exceeded by the market. So you can see market even has reached a higher level. 50% resistance market right now stands, and is forming some kind of the A, B, C bottom. It's 100% extension stands here. So that's some kind of the agreement. Also, this is the lower border of this consolidation. It's 50% level from that swing, and as we said, this is the Fib level from the whole action here to the downside. Now we just need to wait and see what will happen. So market right now stands at our level. Currently we do not see any reversal patterns on the lower time frames on the 15-minute chart, since market just has reached this level. And let's see what will happen. If market will fail to continue upward action here and will turn down, in this case probably this will be the sign that we will get the breakout down, and this will be some kind of the early reversal to the downside inside of the triangle. This is important, because usually before reversal, before breakout, market fails to reach the opposite border of the consolidation. This very often happens inside of the triangles, and that's particularly the moment that we should watch for. So nothing more we have right now, so no other patterns that could help us to estimate some early signs of the possible breakout either to the upside or to the downside. We do not have them. All that we have is just significant resistance here, and we would like to see that market will not move higher. Second, we would like to see early reversal to the downside before a reaching of the opposite border. Okay, so that's all that we could do here right now. That is important for those of you who would like to anticipate the possible bearish breakout. If you feel if you feel the confidence that you really could do this and you are ready, you have the experience to do that, well, it's possible theoretically, but you should be extra careful and catch the possible signs and what market will tell on this event. But for most traders, we think that it would be better to wait the final breakout. So if it will indeed come and market indeed will drop below 111, the next destination point in a medium term perspective will be 105. That's why there will be pretty much room for taking the position, and this will be much safer situation. More clarity will be. So that's our current view on the euro currency. And also, guys, keep an eye on the Canadian dollar. So because Canadian dollars right now is also stand at the eve of the possible breakout. By the way, as crude oil shows the patterns of the possible trap, maybe it will be based on the strength of the United States dollar, right? Especially we are coming to Fed meeting. And from that standpoint, it seems that euro currency should drop. Just logical conclusion from the situation that we have. So let's keep an eye on the process, and let's see what will happen.